A conflict thousands of miles away is quietly crashing your stock portfolio. And the scary part? It's all connected through one global domino chain.
So, if you've been watching the Indian stock markets lately, you probably noticed they're under some serious pressure. After a nice period of calm, volatility is roaring back, and a lot of investors are starting to feel the heat. So what's really driving this sell-off? Well, in this explainer, we're going to connect the dots, all the way from global tensions to how it's affecting our markets right here at home. And we'll even lay out a clear framework for how you might think about navigating all this uncertainty.
Let's start with just one number, over 20. That's where the Nifty VIX is sitting. Now, you might know this as India's volatility index, but most traders just call it the fear gauge. And after a little dip, it has spiked right back up, which is a pretty clear signal that anxiety and, well, fear among investors is on the rise. So what's causing all this panic?
Here's how we're going to break it all down. First, we'll take a look at the damage across the entire market. Then we're going to trace what I'm calling the global domino effect that's causing all this chaos. We'll also put a spotlight on the IT sector because it has been hit particularly hard. And then finally, we'll explore a practical playbook for investors trying to make sense of it all. All right, so let's dive into the big picture. The markets are definitely feeling some significant pressure, and this isn't just a case of a few bad apples, you know? The sell-off is wide and it's deep. Just look at how uniform this is. We're seeing some pretty sharp falls right across the board. It doesn't matter if you're looking at the big guys in large cap, or if you're in mid cap or even small cap companies. It's the same story everywhere. This isn't some isolated problem. That negative sentiment is hitting every single corner of the market. So, what is the root cause of all this? Where is this coming from? Well, the answer actually lies way beyond our borders. The fall we're seeing in the Indian market is basically a chain reaction. It's like a series of dominoes tipping over, and it all starts with major geopolitical events. And here's exactly how that chain reaction is playing out. First, you have geopolitical tensions flaring up. That, in turn, causes crude oil prices to surge. This then weakens the Indian rupee and pushes up government bond yields. And the final domino to fall? Foreign investors?
Watch the full video on my channel. This is just the beginning.